Have you guys ever wondered what the minimum down payment requirements are in Canada? Well, in this video, I'm going to tell you. Now, without further ado, let's get into it. Hey guys, what's up? My name is Kevin and I am a real estate agent in Toronto, Canada. In this video, I'll be going over the minimum down payment requirements in Canada as well as mortgage insurance. Now, before I begin, if you are a first-time home buyer or a home buyer in general, then I have a very useful and very pretty home buyer's guide that you can read. It basically walks you guys through the process from start to finish, step by step, so it will be extremely useful, especially for first-time home buyers. I have that linked right down below, so if you want to download it, go ahead, please do. Would be very useful. I'll also make a separate video on this in the future, so make sure you are subscribed. So let's start off with what a down payment is. So a down payment is a sum of money that you put towards the purchase price of your home. Your lender, whether that's a bank, credit union, etc., then deducts that payment from the total purchase price of your home. And the remainder is your mortgage. Now in Canada, if you put less than 20% of a down payment, you need something called mortgage insurance. Now I'll get into more detail about this later in the video. For now, let's just talk about the minimum down payment requirement. Now at the date I uploaded this video, these numbers are correct in the country of Canada. But also, I cannot guarantee that these numbers that I say today would be the same as the future in whatever time you're watching this right now. So make sure you double check these numbers. So in Canada, there are 3 price brackets for down payments. The first bracket is less than $500,000. If the house you intend to purchase is $500,000 or less, the minimum down payment requirement is 5%. This one is pretty simple to understand. The second price bracket is $500,000 to $999,999, basically $1 million. Now here's where the calculation changes a little bit. So let's say, for example, the purchase price of your home is $700,000. Your minimum down payment on the first $500,000 would be 5%, as I mentioned previously, but on the remaining $200,000, you would have to pay a minimum of 10% down. So to clarify, if your purchase price is between $500,000 to $999,999, you would have to pay 5% down on the first $500,000 and then another 10% down on the remaining. So let's do a quick calculation with the previous example of a purchase price of $700,000. So as mentioned, you would have to pay 5% down on the first $500,000, and in this case, that is $25,000. The remaining amount is now $200,000, so you would have to pay 10% down on that $200,000, which in this case is $20,000. So $25,000 plus $20,000 is $45,000. Therefore, if your purchase price of your home is $700,000, the minimum down payment is $45,000. I hope this makes sense. Now, the third price bracket is anything over $1 million. This one is super simple. Basically, anything that you purchase over $1 million requires a minimum down payment of 20%. That's it, pretty simple. Now, of course, you could put down as much money as you want, regardless of price point, as long as it's within the minimums. However, if you choose to put less than 20% down, you have to get something called mortgage insurance. The fee you pay on this insurance is called a premium. Mortgage insurance premiums currently range between 0.6% to 4% of your loan. And the premium depends on the amount of money you put down. The bigger the down payment, the less in premiums that you pay. Now here's a chart from the CMHC which shows the premium you pay based on the loan to value ratio. Now the loan to value ratio is essentially the amount of loan you take to the value of your home. So for example, if you put 5% down, then the lender is then loaning you 95% of the remainder. So in this case, referring to the chart, you would be paying a 4% premium. So let's say you buy a home for $400,000 and you only put 5% down, which is $20,000. you would have to borrow $380,000 from your lender, but you would also need to purchase mortgage insurance. So once again, referring back to the chart from the CMHC, you are borrowing 95% of the value, which means you pay a 4% mortgage premium. So what this means is you'll be paying an additional 4% on the $380,000 that you are borrowing. That math works out to $15,200. So when we add the premium to the loan that you're borrowing, that total is $395,200. It's important to note that this premium gets added to the total cost of your mortgage, so your monthly payments shouldn't be impacted too much. Now hold on, having mortgage insurance isn't all that bad. It may seem like you're paying more money to borrow a loan, which you are, however, there are some benefits to it as well. Obviously, if you don't have 20% down, which a ton of people don't, then you have no choice but to purchase mortgage insurance. However, the biggest advantage to mortgage insurance is that you would most likely get a lower interest rate for your mortgage. If you have mortgage insurance, the mortgage that you get would be considered a high ratio mortgage. This means that your loan to value ratio is high. And since your mortgage is now insured by the CMHC, you are a much lower risk to your lender. What this means is if you were to default on your mortgage payment, because it is insured, your lender would most likely receive the full amount back. However, if you don't have mortgage insurance, then your lender is not guaranteed to get the full value back of the mortgage if you were to default. So as I mentioned, with mortgage insurance, you are a much lower risk to lenders. Now that is something you should definitely keep in mind. And that is it. Now, before we go, I just want to mention that I am not a mortgage broker or advisor, so take everything I said today with a grain of salt. Definitely speak to your professional mortgage advisor, mortgage broker about anything that I said, just to double check. Also, speak to them to get more accurate and up-to-date information depending on when you are watching this video. Now, as always, if there's anything that I missed, please let me know down below in the comments, because knowledge is power. Speaking of the comments, please let me know if you guys learned something, what it is that you learned, or also if you have any questions or comments. You can also send me private messages on my Facebook or Instagram, which is, I think it's over here. I think it's somewhere here. Now, as always, if you guys learned something and want to see more, please give the video a like, hit the sub button, and also click that bell icon so you never miss an upload. With that said, thank you guys for watching, and I'll see you guys in the next one.